Good morning from Chicago, traders. It's 8:01 a.m. Chicago time on Tuesday, the 8th of March, 2022. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2186. Today, we're looking at a market that is mixed currently, as we see here in our convergent trading pre-market summary sheet. The U.S. markets and pretty much across the globe dropped pretty dramatically overnight, but then took a pop higher as news started flowing out of the Ukraine crisis that a ceasefire is underway. And so, excuse me one second. So we popped back in and we are currently mixed in our view. The S&P is trading just above the prior day settlement, which was at 41.9850. With the DAX and the Eurostoxx slightly higher. The Nasdaq's a little bit off, just slightly weaker, but there've been, the headline risk is key here. Continuing to come across. Russia says that humanitarian corridors are open in 5 Ukraine cities, and that crisis continues. There have been some numbers overnight. The balanced trade out of Canada is a key figure. Came in much better. Balanced trade for the U.S. came in slightly worse. The expected 87 billion deficit got 89.7 billion deficit. Exports were relatively in line, and imports were bigger than expected. We're looking for wholesale inventories, IBD tip at 10 a.m. We're looking for the API numbers at 4:30 this evening. Australia releases its Westpac numbers. Japan releases its GDP numbers, and the inflation rate out of China comes in at 8:30. That's likely to be a mover this evening. That's what's on deck. Again, crude oil continues to hug the near highs. This, if you recall, yesterday the high was $130.50, $130.50, and it came off pretty strong yesterday to settle at 119.40. This morning it got as high as 126.03, 126.03, and it's currently trading at 124.35 with a low of 117. So crude is up 418 basis points, and is basically leading the pack. We see a bid in cryptos and weakness in copper still, and the treasuries as well. Treasuries getting sold a little bit here. Again, yields continue to push higher. March 8th, where do I have the wrong date? Probably in the announcement. I'm not sure where the date is wrong. But yes. Oh, by the way, yes, thanks for reminding me. The 10th, this Thursday is, oh, thank you. Thursday is official rollover. And let's correct this because I'm anal like that. The 10th, this Thursday, is official rollover, but as I've been doing in the last few rolls, I'm going to continue to trade March through Friday, through Friday's close, and then we'll roll everything on the Sunday open. So again, this Thursday is official roll, official exchange roll to the June contract, the M contract, M2 contract for the U.S. indices. I'll continue to trade H2 through Friday, and then we'll roll over the weekend. So I'll be quoting the old contract starting Thursday and Friday and not rolling forward. Okay, let's look at the S&P. The S&P is basically P-shaped. Volume 420,000 contracts, relatively high, in line with yesterday. Inventory is pretty balanced at 19%. The range is quite wide at 94.75. If you recall, yesterday we had a range of about 90 pre-open, and we ended up with a relatively wide range, something like 100 points for the day session. So we're expecting again the probability to continue that the day session would expand the range beyond the overnight session in terms of overall range. The point of control 42.10. We're trading at 4,200, so we're beneath the point of control, and that's where we stand this morning. So that's our layout, our big picture layout for the day. I'm going to start today with the bigger time frame, and we'll squeeze back into what we've got currently. So let's take a look here. Overall, yesterday, if you recall, I talked about how Gaussian and how compressed this is, how we were on last week, we were on top of the prior week's point of control, 4,300. And that this is compressing, and we are likely to see a strong move out of here. We're in a sandwich in between 4280 and 4400, right in here with the magnet at 4343, this point of control right here. That was the lay of the land. So looking down at the field of battle here, those are the most prominent features. The most prominent features coming into yesterday. And I talked about, again, I emphasized to be careful, because when we have this sort of profile, there's a lot of commitment from both sides. And once the move happens, it would be dramatic, and it happened to move to the downside. My guess was that we were waiting for good news and we would likely shift up. So I was wrong there. I expected us to break through the 4,400 and start making our way towards the 4,485 for a retest of the next box up here. But that didn't happen yesterday. We sold off right off the open, and we pushed lower, and we started to make our way down and trading this excess. This is a clear excess day that happened 2 Thursdays ago, followed by Friday, showing us even more that we would continue to push higher. And then here we are weakening, and a lot of that is weighed down by, again, like I've been talking about for the last few weeks, just a massive risk overhang, compounded by our buddy over there, Putin. Not really my buddy, but this complication brings severe risks to Europe, the European economy, which was already limping along, and then contagion effects through the energy and through uncertainties in the European market, and whatever flows out of Ukraine. Ukraine is a huge exporter of wheat, for example, and that's going to put pressure on wheat prices. And I showed you yesterday how wheat is parabolic, which is probably going to have some contagion effects on Egypt, which imports most of their wheat out of the Ukraine, and a couple of other Eastern European countries, and that may cause some unrest. The price of bread doubling or tripling there, which caused an uprising in the 1970s in Egypt. Like, the people think that, I'll get off my soapbox here, people think that as long as something doesn't impact me, as long as I'm protected, as long as I get my gasoline and my food and whatever, then I shouldn't worry and I shouldn't stress about what's going on elsewhere with our neighbor. But as they say, treat thy neighbor, right? Whatever's going on elsewhere, will, whether you like it or not, on some level, will have an impact on everybody. It is a very, very small planet, and so we're seeing these effects. And of course, they're being priced into what we're trading here. To loop back to the breakdown yesterday, it is just hard to imagine, given these multiple risk overhangs, inflation, Fed's tapering, ECB's tapering, the cost of energy, war in Europe for the first time since World War II, really full blown war, really, not to dismiss the 2014 push into other countries, Georgia and so on, and 2018. But it's kind of like being a doctor and treating someone's leg because they have there's poor flow of blood into their leg, and coming in and being a leg doctor and just, or a foot doctor, and just treating the foot without actually asking the patient what medications, what other issues they have, what family history they have. So think of trading in this way. We trade what's in front of us, we trade our process and plan, but understand that we operate within an ecosystem that's much, much bigger than us. And so this is where that third force in the market comes in, and this is where that unknown push can happen at any time. And this is why trading results and trading outcomes are random, because there's just an enormous amount of factors that go into price, kind of like predicting the weather. A small change somewhere over the Pacific might have a huge impact on the European weather forecast for next week, and those two things seem unrelated. So instead of treating the foot, look and find out that the person has diabetes, and that diabetes is going untreated and is causing these blood problems in the foot, that type of thinking. So this is why I'm bringing more and more of a macro theme to the Trader Bite, which is actually consuming a lot of time, and I'm going to try to figure out how to cut that back. But it's really important to imagine that if you're an institution, it would be hard for you to commit people's money on to risk, which is what this product is. This is the ES. We're not going to commit more risk to the ES with too much overhang, too much risk overhang that is very hard to quantify. How do you quantify war? So this is why I said it is going to be very, very difficult to breach 4,500 and hold above, push the 4,600. So it's going to be very difficult to do that because there are way too many pieces that are unquantifiable, and you have to think like a fund manager when you're looking at who is likely to push this market. So overall, we have balanced here. We've created this acceptance at 3,300, 4,300, and we've broken below. Quite bearish behavior last night. Again, this is a 1 tick by 8 point and figure. I can't squish it enough. This is a trend down day yesterday. We closed at the low. Look at the low, very, very poor low, a tremendous amount of volume went off on the low, and we have basically doubled the IB. We have run away from VWAP and mid, and overall an extremely weak low. We expect this to continue lower. So there was a short trade yesterday that I talked about in the Convergent Trading Head Trader channel in the 42.34. 42.34. That short was targeting the double IB low stat. That was just one of the trades that were taken yesterday and talked about. Double IB low stat at 23. So I'm looking for 34 to 23, 13 points for about 3.5 points of risk. The R factor is good. And then I'm looking for to push lower. And it ended up squeezing and squeezing despite the attempt, the multiple attempts by buyers to rotate higher. It was very, very difficult to find buyers. It was the buying just could not carry things, although there was a lot of size hammering on the bid, pushing to sell, but price wasn't relieving very easily either. So what I was seeing yesterday is it could not hold the double bottom stat worked out, it's like 82% historical probability a double bottom at the low would be broken by the end of the session. That's what that statistic is. Once it breaks through, it was a comfortable hold into the low. And if I was a trader that holds through the night, which I'm not, this was an important trade to hold through to the 4180 yesterday. And so what happened then? What happened was we did extend the low. We did extend the low, and then we took this really strong pop higher into 42.15 or so, and then finally completed this move. So what this is it's an impulse pullback continuation, and we are in a corrective type of environment. It is very important for buyers to come in today if they're looking to defend these lows, the 41.0875 low. It's very important for buyers to come in and defend early. We are below the overnight point of control. We are against, excuse me, 1 second. We are against the full session VWAP, and we have tested, look at that baby. We have tested to the tick the mid from above. So this is holding well, and overall I'm looking at this 4186 area as the immediate over underline right here. So this is going to be very important that we hold this, or if we break through, sellers are going to want to cap it, and if they do cap it, this is a strong short into the IB low stat. Do you know these statistics? Have I talked about them enough? Have you looked into these statistics? Very important to know the historical probabilities of the product that you're trading and to box out and define them. But if we get below this 41.8687 and we can't get back above, I'm looking to short this somewhere, and I'm looking for this thing to trickle down into 41.3875. 41.3875. So that's where that stands. So we created a box here overnight. After the pop higher, we tested below. Look at this volume on the low end, excess low. That's a clear excess low. This is a V bottom. This is how a non-weak, this is the opposite of a weak low. This is a V bottom. This is what a non-weak low looks like. This is a weak low. See how it kind of closed with a lot of volume at the low here yesterday. This is what we want to see when we want to see an excess low or a spike from the low. And so I'm expecting that this area here, this box right here, is going to be crucial this morning. So this morning, I'm not going to give you scenarios, but this morning, 42.20 to 41.87, crucial. 42.20 to 41.87, very important area to watch. Very important. There are several things in play with this 41.87. Let me turn on my stock zone. You can see the 41.87 is the over underline. This is the over underline. In fact, why the label is gone? Let's press labels. So you can see it's marked here as the over under stock zone. So very, very important, this 41.87 to 42.20. So we want to monitor very carefully and see how buyers behave and how can they retain control within this box. So they're below the point of control. We'll see if they get above. If we get a push through the 42.20, then we are looking quite bid, and we are likely to make a run for that 42.52 above the low volume node from yesterday, and then we're off to the races and pushing back into and towards that point of control, the 2 weekly points of control at 4,300. So from here, a 42.10 currently or 4,200, we may end up at 4,300 up above. If you recall, 4,300, I showed you that on the composite chart. That's the MC point of control for last week and the prior week. It's actually 4,300 for 2 weeks ago, 4,303 for last week. That becomes the big important area to test from below. So if it does get bid early and it starts to move on this overnight stat on the buy side of 42.33, you're looking at 42.50 for a quick mid-century figure test, and then things are likely to change. You're likely to see a short squeeze and a continuation and a build of a P shape towards 4,300. That's the big picture currently. I'll leave you with that. We have 10 minutes before the open. Again, I'm not drawing scenarios here, but it's just important to understand the price map. The magnet is now down here. This high volume node is a magnet area, but we're above the over underline, and we hope I hope to see us test it, hold or not, don't really care. But if we get a test, this will be a very clear indication as to who is likely to remain in control. And again, the strength right now is on the risks. The risk has the ball, and they're controlling the game. So we'll see what buyers can do to seize control back and push things up. Not seeing much in a macro picture to do that, but overall, we still have the ECB decision this Thursday, CPI this Thursday, and we still have the Fed meeting next week, which is the first meeting that would raise rates since 2018 or 19. So this is all kind of coming together in this crazy story that's forming. Good luck, and I'll catch you tomorrow morning. Take care.